Hey everybody, it's Carrie Green with Carrie Green Real Estate here, over here in Kitsap County. I am your Engel and Volkers real estate expert, and I would love to chat with you. I'm really excited to be bringing together a roundtable today with some really great experts, people who've been into the industry for a really long time. Bill Dunger is one of my lenders that I work with. He's really good about making sure that we have all the information. We don't have deals fall through. He knows how to get where he needs to go, and he's willing to do what needs to be done to get the job done. So I'm really excited about that. And then we have Jo Fleming, who's our Gig Harbor expert. She is experienced in everything from Lake Bay to luxury. Like it's absolutely incredible, the market that she has the opportunity to cover. We overlap a little bit because she also serves Olalla, which kind of butts up against Port Orchard. So I'm really excited about this. Don't forget to like and subscribe, and let's get started. Hey everybody, it's Carrie Green with Carrie Green Real Estate, and I'm super excited to be welcoming some of my best experts to the roundtable. I've got Bill Dunger. He's really done great work with me, from people who have luxury homes, people who had really crazy scenarios, and he's stuck with every single one to find the right program for them. And then I have Jo Fleming here, who's our Gig Harbor expert, Olalla, KP. It's really exciting to bring everybody together and kind of talk about what's going on. So if you're a seller, you need to stay tuned and soak in all the information. So the first thing I want to do is I want Bill and Jo, I want you guys to tell me a little bit about who you are, how long you've been in the industry, and what you have going on. So Bill, you go.
Perfect. My name is Bill Dunger. I'm with Nova Home Loans. I've been in the lending side of things for about 20 years. So I've seen some different buying and selling cycles, and rates go up, down, left, right. So, and every program that's come and gone.
Right. All right, Jo, tell me about you.
So I'm Jo Fleming. I'm a real estate advisor with Engel Volkers. I've lived in the Gig Harbor area for 11 years now and have seen a few markets, so hoping to address some of the concerns going on with this one.
Very cool. So I'm Carrie Green. I am our Engel Volkers expert in Kitsap County. And so one of the things that happens in some of these local markets, when you're working in an entire county like I do, the markets are significantly different depending on where you're going. We have McCormick Woods and, multi level, budget level homes there. And then we have Bremerton, who has no luxury market and, just a really budget friendly environment. Then we have Paulsbo and Bainbridge Island, which are really a lot more of the luxury market. And so being able to pivot and be able to help everybody who comes through, we have to understand that one day we're working on an $800,000 home, and then we pivot and we're working on a $400,000 home. And each financing is different, each walk is different, each offer is different, each negotiation tactic is different. And so we have to be skilled in being able to take care of those things. And so Jo, you're kind of in the same boat over there in Gig Harbor.
Yes, the real estate as a whole is very diverse. We've got waterfront and mountain view properties all around Gig Harbor, even some in Olalla and the KP, but very, very different price points in each location, depending on size of property and the views available and all that sort of thing. And Olalla, of course, is over in the Kitsap County area, so they're a little more tax friendly there. So there's yins and yangs and bits and pieces everywhere.
Absolutely.
Now, I was going to say, in your guys' markets, are you guys seeing houses sit a little bit, or are they flying off the shelves? What's that look like?
So in the Gig Harbor area, even though it's a little bit longer days on market than what it was, say a year ago, we're still an average of 8 days on market for most homes. Going under contract really quickly. And I think a key point there is the homes that are going faster are priced well, presented beautifully. If a home is sitting, it's more often than not due to being overpriced.
Right. I didn't see a lot of price reductions. It just wasn't happening. I mean, if anything, pre-pandemic and even up till now, it's, things were priced at a premium. But I think you're starting to see sellers worry a little bit because they're not selling tomorrow or they're not selling within a week, and it's taken a little bit. And I think that buyers are a little reluctant to purchase something because they feel like maybe they're buying at the height of the market, or because rates are too high, which brings me to the elephant in the room, interest rates, right? I mean, interest rates at 7.5%, is that high? I mean, yeah, if you're looking at, the last 2 or 3 years, I mean, sure, they're higher than the 2 and 3% that you could have had. Over the last 15, 20 years, 7.5 seems like a bargain, to some of these, some of these buyers. I mean, there was back at 15, 20 years ago when rates were 15, 14, 19%. I hear all the stories from, family members and whatnot. Maybe it's a little bit longer that it's probably before I was in the industry. But they were all thinking that interest rates were never going to go down again. And guess what? Look where we're at today. So it's kind of one of those things that, will interest rates go down? We're all expecting that. Yes.
Right. Well, and just understanding that, we had a 2 and 3% interest rate specifically because of a national and world emergency. If we see 2 and 3% again, something else economically is also happening. So waiting for that sweet spot isn't going to work. And at that time, my budget buyers were outbid by investors every time. 28 offers in 2 weeks, outbid every time.
Yeah, absolutely.
So Bremerton has a little bit of a higher sit rate. And I've seen a little bit with really a short memory, right? Well, my neighbor, or they could have, or this is what it was, but that's not what it is today. And really being able to understand that that market is not today's market, and pricing correctly, and then being able to bring in seller concessions for some of the products that you have, Bill, with the sellers being able to rise to the top. We do have low inventory, but at the same time, when you couple low inventory with unrealistic price expectations and high interest rates, that makes it difficult. And so getting the price in the right range, and then having some of these products for sellers to be able to come in with concessions to help buyers get into programs like the 2-1 buy down.
Yeah, let's talk about that 2-1 buy down. It's a temporary buy down, so it's a little bit different than a permanent buy down. You're not permanently buying down your rate forever. Because the plan is, whatever interest rate you're getting today, you're probably going to refinance in the future for some better terms. But the temporary buy down is exactly what that is. It's temporary. So the 2-1 stands for, let's just say your interest rate today is 7.5%. The 2 means it's going to be 2% less for the first year. So you're going to be at 5.5% for that first year in payment. And then the second year, you're going to be at 6.5%. And then it goes back to the remaining term for the life of the loan. But the expectation would be that for those first, 1 or 2 years, that you would refinance, when rates came down, and lock in a longer term interest rate. It just kind of helps the buyer. I mean, for example, just to give some payment, with that. And this is not, financial advice, so don't, put too much onto it. But at $450,000 at 7.5% today, you're looking at a principal and interest payment of like $31.46. Well, doing the 2-1 buy down that first year, it's not 7.5%. It's based on 5.5%. So that first year payment is going to be what's that? $25.55. It's $591 less per month. So it's going to buy you some time to be able to refinance. Maybe rates didn't go down to where you could refinance quite yet. Well, you've got another year at 6.5%, and the payment's $28.44. Well, in the next 2 years, I would think that, hopefully rates come down and you're able to take advantage of that. But with the seller paying this cost to be able to do that, for the buyer, you're not just losing that money that they pay to buy down that rate. When you do refinance, whatever's left over and that the seller paid that's not used, you refinance in the first 9 months, 10 months, 12 months of that 24-month term that you've got a lower payment. The remaining funds that are not used pays down your principal interest on the new loan when you refinance. So it's kind of a win-win.
It really is. So Jo, tell me a little bit about some of the problems that you're having with sellers wanting to downsize.
Right. So with the downsizing as well as upsizing and moving out of state, I have encountered a number of people who have been really hesitant when it comes to listing their home for sale. And one of the big issues is because of the low inventory, they're worried that they won't be able to find a home to move into, and they, could be left homeless or, couch surfing or having to, stay with parents, whatever. One of the ways I like to do this is by writing a contingency into the contract that states specifically that the seller must be able to, given the opportunity to find a new home before the buyers take possession of the home. Now, you can do a rent back as well, which is, you basically become the landlord as the seller. There's some risks to that, but there's ways around everything. And being creative with that is one of the ways that we've got to help sellers experience less anxiety and know that they're not going to be left without a home.
Absolutely. So coming back to the rates a little bit, Bill, we got sellers that are trying to hold on to their 2 and 3%. They've been there for a while. They're looking to downsize, and they're just not okay with, doubling their interest rate, but they're looking to downsize. What do you have to say about that?
Yeah, I would say, it's kind of a double-edged sword, right? I mean, if you're selling in today's market, you're getting a premium for the house that you're selling. I mean, yes, that you're going to take that money and roll it in something else that you're paying a premium for, but it's kind of a lateral move. Right. The one thing that is really tough is when someone says, well, I'm going to wait for interest rates to go down, right? Or I'm going to wait for prices to go down. Well, if interest rates go back down to, let's say, in the mid 5s, guess what's going to happen? Prices of homes are going to get shot up because all these buyers are going to think this is when I have to buy. So that $450,000 house is now $550,000,
Right.
And
so what you can explain probably better than anybody, right? So overpaying, because now we're in a bidding war, overpaying at 5% interest or getting in $50,000 less at 6% interest, which is the better deal?
Yeah. So, I mean, if you today buying, let's just say 450,000 at 7.5%, I mean, you're at a 3150 payment, principal and interest. But you want to wait for interest rates to go down to 5.5. Well, that sale price of that home is now 550. Well, your payment's 3122. Well, I mean, it's kind of a lateral move there, but you wanted to wait, so it's not, it's one of those things. I talk to a lot of people. If you're ready to buy, right? Because it's the right time to buy and you want to purchase a home to live in, and you're not flipping the house or anything like that in the next year. And you're going to be able to refinance that down the road for better terms at the price you got today, not 2 or 3 years from now.
Right. Absolutely.
Yeah.
So I'm really excited to have you guys kind of getting some of this information out and ready for the public, right? Because I think that real estate agents and lenders have kind of kept information close to their chest and only given out what they needed to, and just, this is what's best for you. But there are so many options, so many ways to help people, and having people come together and be able to get the information out into the communities is what is going to be best for everybody. And it keeps our agents and our lenders at the top level of performance and understanding what our job really is as agents and lenders. So Bill, leave me with a parting comment.
Ooh, parting comment. I would say don't let interest rates scare you right now. I mean, in the grand scheme of things, they're not that bad, and you're going to be able to refinance it for better terms and better payments, and utilize the 2-1 buy down if you're afraid of the payment for the first 2 years. Use that.
Yep. And that's something that could be negotiated with the seller. Like,
absolutely.
Talk to your agent, bring that 2-1 buy down up to your agent. Like, these are tools that you can ask for. Jo, give me a parting comment.
So I would like to encourage you not to be afraid in this market to make a move, whatever that may be. Reach out to myself or Carrie for real estate advice that is structured to your specific needs, customized for every situation. And I don't just offer, taking care of you for the sale of your home or the purchase of your home. I take care of you throughout the whole process and beyond. Genuine care about your situation. So thank you so much, Carrie, for having me on here.
Carrie, your parting words.
So my parting words are that I only partner with people who are like-minded with me, right? And I believe in service over sales. So buying and selling homes are going to happen. They have happened since the dawn of time. And real estate has been a real sketchy industry since the dawn of time, right? We are seen as used car salesmen. We are seen as people who just want to make a buck so that we can feed our families. The reality is homes are going to buy, homes are going to sell, but understanding why agents, why mortgage officers have the knowledge that they have and they're held to a high standard is because we are here to represent your best interest in your situation with your home, your purchase, your sale. So the reality of the situation is get with like-minded people. Understand that the journey to homeownership happens long before you open the first door. We have credit repair services. We have, lending programs. I have Home Partners, which is one of the only legit rent-to-own programs out there. So don't go it alone. Get the experts behind you, and we're here to help you. So people over transactions. We all have to eat, guys. It's a fact. But we want to help you in your situation and where you are.
I love it.
So
thanks for having me on, Carrie.
Absolutely. And I want to thank you guys for coming to the roundtable. Let me know if you have any questions or if there's anything that I can do for you guys, and we'll just keep trucking forward.
Let's do it.
Thank you.